Junk bond king Michael Milken once said that it was the earlier spreadsheet program, VisiCalc, that made possible the LBOs and takeovers of the 1980s. Technology has come a long way from then. Professor William Deringer of MIT has studied what effects this ever-increasing computing power is having on which deals get done and how. We asked him what led to his research.
So this it's sort of an interesting story. I was actually at an event at MIT, and I was speaking with someone who was one of the board members at MIT, and he mentioned, I used to know some of the people who were involved with VisiCalc early on. And a series of conversations led me to this kind of interesting anecdote that apparently Michael Milken at one point had said that if you really want to understand what happened in the 80s and the kind of the rise of buyouts and the sort of mega deals of that period, the real key is VisiCalc. So it was spreadsheet software. And so I spent some time trying to kind of track down this anecdote, and I found it mentioned a couple of other places, and it took me on this sort of interesting journey of trying to figure out, well, what would that have actually looked like? So how would spreadsheet software actually have changed things? And what I found was that it's sort of more than just a matter of kind of making calculations easier, but that it really seemed to change the kind of limits of financial thinking and imagination. So things that were pretty hard to do, so modeling an LBO by hand, kind of on paper, was very arduous, very time consuming. And importantly, it was not sort of dynamic. You couldn't kind of tweak one parameter, tweak an interest rate, tweak a projection for revenue growth or something, and then kind of get a new answer. And so what seems to have happened quite quickly, and there are interesting quotations about this from people at the time, was dealmakers realized that you could use spreadsheet software to not only kind of model potential deals, but also to sort of scan the realm of possible deals. So instead of having to just look at one possible deal, you could run similar sorts of scenarios across a kind of wide range of different potential target companies. And I think that in some ways, really, we could even say it sort of changed the way in which business was understood from the sort of perspective of Wall Street.
From your work, could Mike Milken have done what he did without spreadsheets?
I don't think so. I mean, I think there would have been significant limitations. I mean, among the things that's interesting about the Milken story, and this was actually a lot of what my research was interested in, was he was sort of simultaneously, his work was simultaneously very technologically innovative, and at the same time sort of very personality driven. But there were certain aspects of the kind of Milken machine that was built that was highly technical. I mean, much of it was even down to things like being able to track and sort of catalog the existence, sort of where the market was in high yield bonds, who owned things, who were potential buyers, but then also kind of valuation techniques. There were sort of long-standing methods, of course, for valuing bonds, but with new sort of handheld calculators and then with spreadsheets, the ability to kind of analyze and value fixed income instruments became kind of radically easier.
Where are we now? How is the current technology changing the nature of deal making and private equity? And let me ask you a very specific question. Do we just not need as many private equity bankers anymore?
Yeah, so I mean, as someone who spent most of my time in the past, I know sort of about as much about the kind of really cutting edge stuff as certainly many of your viewers. But from what I understand, one of the areas of development is, for example, trying to use the capacity of AI to sort of simplify and automate things like modeling LBOs, right? So when I was did training, my first day as a investment banker, not the first day, but maybe week 2 or something, you learn how to kind of build LBO models on spreadsheets, and that's the sort of thing that required quite a lot of training, required a certain kind of technical artifice and expertise, and that's the sort of thing that may go towards that may require less sort of direct kind of time and training. But one thing I think we know from the history of technology, and certainly the history of the kind of calculation tools that I like to study, is that the kind of automation of some of those calculations and the automation of kind of lots of different things in the world don't necessarily lead to less work. So if I had to guess, and I mean, as a historian, we're always sort of cautious about making prognostications. I would not think that new tools would sort of lead to the need for fewer people, but rather what I would expect to happen was that they would kind of change the nature of the work.